You know what makes for a great podcast? Data.
Welcome to the Mind Money Spectrum podcast, where your hosts, Aaron Ogti and Trishul Patel, go beyond traditional finance questions to help you explore how to use your money to achieve the freedom you want in life.
Hi, my name is Aaron Ogti. I'm a financial advisor in the Bay Area. I'm here with Trishul Patel, a wealth manager on the East Coast.
Hey, Aaron, great to be here today. And thanks everybody for listening and watching episode 159.
Great to be here as well. So last time we were talking about real estate, and I was defending my argument that real estate, especially properties with a backyard, would be a good asset to leave to heirs, good generational asset. Partly, it's part of my argument as a big diversifier against stocks not being infallible. That like stocks have some risks. I think real estate was a good portion of a portfolio to leave to heirs as part of generational wealth. And Trishul brought up the comment that, well, Japan has a shrinking population and the empty houses has really driven down the value of real estate in Japan. And today we wanted to explore that comment a little deeper. And for those listening, I apologize in advance because when you start to get into population conversations, you really start to include a lot of data, and visualizations make the data really easy to understand. So for those watching, you can get a treat. For those listening, you're kind of screwed. So hopefully we'll try to say the numbers out loud and you can follow along. But today we wanted to kind of discuss, it's not going to be just population, but that it ends up being population, because when you think about GDP growth or a growing economy over years, decades, generations, population ends up being one of the single biggest drivers of that. So we're starting off with the kind of the premise for an economy to grow. You either need the population to increase or the production per person to increase. They become more productive, usually through the uses of technology, and therefore they can generate more economic value. Okay, is that a good starting point, Trishul? Do you feel that's a fair statement we can all agree on?
Yeah, we're good.
Okay.
I hate to get too controversial right on the definition.
So, again, in a growing economy, population is growing, and or population is becoming more productive on a per person basis.
Yeah.
The other aspect when it comes to actually how it affects persons is that for stock markets to grow and other businesses to grow, it's a next level beyond that, but the economic growth is a big driver of that. That it is possible for a stock to grow if an economy is not, if they are simply doing better than everyone else. But for the stock market as a whole to go up, and kind of that rising tide lifts all boat kind of thing, the rising tide is a growing economy. So while we're not saying that any individual stock or individual company can't do well if the economy is not growing, one of our premises that we both support for a long time is passive index investing and just buying the S&P 500. And a big part of that is making sure that the economy is growing, lifting all those boats. We also talk about having international stocks as a very important part of diversification, so that we're getting away from just US growth versus the rest of the world. So now we're going to kind of get into some of the other demographic items that inform a growing economy, which inform growing stock markets for investing and investors. Okay, so like we're trying to like go really far back into like the the data of how we can get to growing stock market, but we want to understand why this is important to understand as a foundational level. Okay. So Trisha, do you want to start us off with just kind of a few relevant data points to help understand either where we've been or where we get to some of our concerns 2 generations from now?
Sure. Yeah. So where we started, Aaron, is the notion that the overall economy has been growing due to increases in productivity. So maybe we can just start with that. Like, what has the overall economy been doing over the last generation or two? So I think we've even looked at this table, maybe we're in our 7th season, Aaron, I think. Like
Maybe 8th
eighth.
season?
Oh, we're in the 8th season of doing this. So there's
Yeah.
been a lot of episodes. We probably talked about every data point that might be relevant. But one thing I like to think about is just global GDP, right?
Mhm.
What is the overall productivity of humanity? Because when I think about a passive portfolio, that's what we're banking on. We're banking on the entire planet doing better. Like the thesis I like to put forward to my clients is stocks will be great if Earth is better,
Mhm.
decades from now. And the better Earth is, the better your stocks will be. And one way to kind of think about that as it is as a function of global gross domestic product. So what is the entire output of Earth and how is that changing year over year? So maybe we can start with that. I'm going to share a screen here and then we can talk about some numbers. So
So we're looking at not just US to start our conversation, but uh, growth of the entire world. So both population growth and productivity growth equals GDP growth of the global population.
where this is
You want to say
coming
that again?
from.
Sorry, you covered yourself with your screen.
Oh, I'm sorry. Is it visible now?
Yes, I made you visible.
Okay. So we're showing a table here that is actually a breakdown of GDP by country from the IMF, and we can see global GDP is a function of just adding up the GDPs for each individual country. I'll read off like the top 5 just to give you some insight. So we have United States about 30 trillion GDP. That works out to about 90K per individual in the country. And that's grown, like a couple percent, like 2% over the last year based on 2025 data. Number 2 is China, about 20 trillion. That works out to about 13,000 per individual. Again, very high GDP, but when you add in the total number of people, you still get a good number, but not a larger number as the United States, 90K versus 13 or 14K per individual. Next, number 3, the third largest economy on the planet as of 2025 was Germany. And they have about 60K per person. Then Japan, number 4, 4 trillion GDP of 34K per person. And then number 5 is India, 4 trillion GDP, but only 3K per person. So one thing we might realize is there's a big difference in the size of these economies. And there's also a big difference, even in the top 5, of how productive each individual is per person.
Mm-hmm.
So now let's look at just overall global GDP over time. So that's just another table here.
You want global GDP over time?
Yeah. I actually like the Wikipedia article on this the best. So we'll go to Wiki. Oh, I wish they had added it up. They didn't add it up. Okay. I do have a couple points to make, though. So, one, we want to look at GDP in US dollars, but then also we want to normalize it because the spending power of the dollar isn't the same across different countries. So, that's where another measure of economic growth, known as purchasing power parity, is often taken into account. So, this tries to normalize the GDP data based upon the purchasing power of how far those dollars go in that given economy. For example, the cost of living in China is far lower than the cost of living in the US.
Mm.
So what we know, I was actually surprised to see this, but it looks like on a purchasing power basis, China's purchasing power parity GDP per capita is 33,000, which is actually higher than the US of 31,000.
Yeah.
And
So
then
if you account
India,
for cost of living, et cetera,
right,
it is
yeah.
it's only
And then numbers,
13,000 in US dollars, but it costs significantly less than the US.
yeah, meaning you have a buying power of 33,000 in China for your 13,000 income that you earn. What that kind of means in a real basis is that, like in China, with 13,000, you can still afford a home and
Mm.
your transportation and your food, even though in the US, that same 13,000 wouldn't cover your mortgage payment, even,
Okay.
or your for some
So
maybe their car payment.
I have a good chart for you. It's not the same Wikipedia, but
Yeah,
if you want to take a look at this real quick.
yeah,
So I think this is what you're looking for. This is macro trends world GDP. So it looks like it's up to about 100 trillion in US dollars, and has grown. Um,
yeah.
uh,
That's what I was actually going for as well.
yeah.
Yeah.
So we
So
still have seen, especially even in the last 3 years, it has. This is again 2023, but
yeah.
we have seen growth still. It probably dipped due to COVID, et cetera, but we have seen that that's still
Yeah.
consistent growth of
So
GDP.
so what Aaron is showing is from like 1960 to like the year 2025, a chart of
1960 was about 1.5 trillion. 1980 would have been about 11 trillion. 2000 was 33 trillion. 2010, 66 trillion. And 2023 is 100 trillion.
right. So that means the entire economic output of Earth is about $100 trillion a year. That's how much economic product the planet is creating and consuming as well.
We
So
also have seen it now showing a per capita version. We have seen it also has been growing. It's up to about 13,000 in US dollars per person. So again, this
yeah,
isn't normalized to that purchasing power level, but this is showing that independent of population growth,
yeah.
each of the global economy has been growing due to production increases.
Right. And, Aaron, maybe if we just throw on one more graph of what has the stock market done, like over this period,
Uh,
I can do
it has
that.
also gone up a lot.
Yeah,
So
to
like
give
you're
us,
like a global, but you want to have like a global stock market to
yeah,
compare
that's ACWI. We can look at that.
the
So,
all country world index.
right.
Okay.
Oh boy, this whole thing is like AI now. Google Finance. Let me.
Oh,
They like even AI changed the colors. Where's the search bar? Okay, ACWI. Okay, so ACWI is basically just all the publicly traded stocks meshed together by their relative sizes to give you some sort of barometer of the entire global stock market and how that has changed over time. I'm going to click max and let's see how far back this goes. Um, this gives us only the last 20 or so years, but when we're looking at the
that's the
chart,
ETF, and that's why when the index and the ETF came into existence.
yeah. So the tricky part with financial data in general is when you look at things on a global perspective, that data just isn't there going back so far.
Yeah.
So a lot of the times in the industry, what we end up doing is we end up using the S&P to go back, and then just proxies for the S&P to go back even further, and then we try to extrapolate what that might end up being on a global sense. So you kind of have to go with what you have. But the point I wanted to make is, for example, in the last 15 or so years, the stock market globally is up from like around 50, call it dollars, on a normalized basis, to like $150 now, so 3x, right? And global GDP over the last 25 years is up about, you can quickly check, Aaron.
20. So how many years?
Since
2008.
2008. Yeah.
We went from about 64 trillion to 100 trillion.
Right.
So we're looking at a 40-ish% growth.
Yeah.
Maybe
So here's
50% growth.
here's the interesting thing. So the entire global economy has grown by 40 to 50%, but the stock market has grown about 150%, about 3x. And here's why that happens, right? When you think about stock markets, you're looking at the price of equities going up. And the price of equities is represented by the stock portion of a company's valuation. And typically the valuation of a company can be thought of as two parts, right? One part is the stock portion and the other part is the debt portion. And you add the two together and you get a rough notion of the valuation of the company, or basically the book value of the assets.
This is the like net worth equals assets minus liabilities.
Yeah, that's another way to think about it. Yeah. So the net worth is like the value of the stock market, right? And the way companies are typically financed is they have a certain amount of debt and a certain amount of equities. If you take on too much debt, then you're known as being over levered. You're relying too much on debt to fund the company, which can be risky. And if you have too little debt, that means you're relying too much on equities, meaning you could be borrowing to accelerate your growth a bit more.
Hmm.
And a good ratio that we kind of see is like a 1-to-3 or a 1-to-4 ratio on aggregate across many different companies and industries. Of course, things are different.
1-to-3 debt to equity.
1-to-3 equity to debt. So like 20% equity, 75% debt.
Oh, okay.
25% equity, 75% debt. For
And so
example,
that's where we see exactly like a 3-to-1 leverage. And so if the global GDP has gone up 50% in this time frame, the global stock market has gone up 150%.
Exactly. Yeah. Yeah. For example, when people take out a mortgage on the home, they put 25% down, right?
Yeah.
They're levered 1 to, that's their equity, right? That's their
That'd be a
equity
1-to-4, yeah.
portion. That's like a 1-to-4 ratio
Yeah.
in terms of how much levered they are
Yeah.
in their position in their real estate. And what that means is that equity grows on a levered basis in that real estate. So you get more than the actual growth of the actual real estate, because part of that growth is financed by borrowing.
The example I use with clients to understand leverage for a mortgage, and I'm using round numbers to keep the math easy. If you buy a house worth $1 million, you put down 20%, that's a $200,000 down payment. You're going to borrow $800,000 for a mortgage.
Mhm.
If your $1 million property goes up 10%, goes from 1 million to 1.1 million, your mortgage is still 800,000, but your equity has now gone up by 100,000 from 200,000 to 300,000.
Mhm.
So a 10% growth in the asset led to a 50% growth in the equity,
Mhm.
because that 20% down payment gives you that 5-to-1 leverage.
Yeah, exactly.
It does
Yep.
work the other way though. It's like if that asset goes down from 1 million to 900,000, you still owe 800, so your equity went from 200 to 100. So
Yeah.
you had a 50% loss on your equity. So the leverage of borrowing goes both ways.
Right. It's like an amplifying effect
Mhm.
on the movement of the actual assets. So you have the actual companies or the economy that's growing at 2%, and then you lever it by like a 3x, and then that's how you get a like 6% real growth on the stocks over
Got it.
time, something like that. So the growth of the stocks over the last couple generations has been propelled by two key things, right? Growth in the population and growth in the productivity per worker,
Mhm.
which has led to this around 2 to 3% per year growth in GDP. and around 6 to 7% after inflation growth in the stock market.
Mm-hmm.
And now our big concern is, well, what happens if one key component of that growth formula starts going away or going negative, meaning population starts flatlining or decreasing? So I think what that would mean for equities is now they don't have growing people who are productive to lean on as a force of driving forward the growth in the economy and the growth in the valuation of stocks.
So this is a good point where we're going to make guesses on global population growth, and we're going to use individual countries at different stages as examples of possible futures. Would you say that's a fair assessment?
Yeah, because essentially the global economy and the global stock markets can continue to grow if global productivity grows higher than the growth required to take care of the people who are no longer there or declining or not being
Uh,
productive.
say that again.
The global population can still continue to grow. I'll say it better because
Okay.
I butchered that. The global population can continue to grow if the growth, I mean, the productivity per person is high enough to take care of the people who are no longer being productive, either because they're
Okay.
not being born or because they're dying off.
So, okay. So global GDP can still grow even if the population isn't growing,
Mhm.
if we have increase in productivity by those still working.
Right.
Okay.
And essentially, the global population is just a function of two things. It's a function of how long people are living, right? The longer people live, well, that means global populations will stay higher, but also how many people are being born, right? The birth rate. So if you have people not living any longer and birth rates declining, well, then global population will start to shrink or
Okay.
flatline and then shrink.
Okay. So I have a really good visual here. I want to share this.
Okay.
This is helping you understand data. This is world population growth. Again, so far macro trends has been really good on the Google searches and the visualization. So I'm happy with this. This population growth looks really, really steady. We're now at 8.2 billion. In 2000, we were 6.2 billion. 1980, we were 4.4 billion. But that looks like a almost straight line,
Yeah,
like a
linear.
straight slope, very linear growth. That's
Yep.
actually the point. It does look linear. And as anyone who's studied finance, and we've talked about the idea of compound growth, if you're getting the same 10% rate of return or even a 2% population growth, it's going to compound. And we should actually see, if we had the same rate of population growth, this curve would be increasing exponentially, and it's
Yeah.
not.
That means
And we can actually see
oh, good.
our
I was gonna
annual
say,
percentage change is actually going down over the last, probably the last, I'll say 40-ish years. Probably peaked around 1970. We had a 2% population growth. Again, this is global. And
yeah.
we've seen a pretty steady decline of population growth
Yeah, look at that. So in order for a population to grow linearly, growth has to be decreasing,
as
which
a
it
rate. Yes.
has a rate.
Yeah,
Yeah.
growth has to be decreasing. Correct.
Yeah. Look at that.
So,
So for our listeners, what Aaron showed is the rate of growth has been decreasing to the point where it's getting pretty low. That rate of growth is
the
um
last few years, probably since 2020, have been under 1%.
yeah, right. And
So,
then, of course, if the growth in global population hits zero and starts going negative, that means there's going to be less people.
yes. So now we can start to, again, it's one of those, if the population starts decreasing, because we have seen this, and we have other visualizations when we get to it, of as countries kind of move from emerging markets into developed countries, from developing to developed, and they start realizing that their kind of purchasing power per population starts going up. Because again, like these are like economic success stories, if you will.
Mhm.
Like the population is doing well enough to support people in whatever endeavors they choose. The population starts choosing to have fewer children.
Mhm.
Uh, Going back probably 100+ years, the one of the big ones is infant mortality has dropped dramatically. I think
Mhm.
I saw you have a chart on that. But basically, if you go back 120 years, you had 4 or 5 kids with the idea that 2 or 3 of them might live past the age of 5. And it's in developing countries, this is similar. It's just lagging by several decades, if not a century. But pretty consistently, as each country's GDP per person has grown, they have been able to improve infant mortality, and those countries stop having less children because they're more likely to survive. So that was kind of the first trend of going from 5 kids per person down to 2 or 3 kids per. We track it by females. The idea, uh, I don't think it's what conversation today, but if we assume the population is half male, half female,
Mhm.
then we can track that each couple produces 2 kids. Each the females producing 2 kids, and so that's going to be our population growth or negative metric.
Mhm.
So yeah, Trishul showing a good chart where we can see that in Nigeria, Somalia, Chad, those countries have an infant mortality above 10%. Uh, the world is down to 3.7%. This is children dying before their 5th birthday, and the European Union is down at 0.4%.
Yeah.
So again, it's showing that if the population can depend on their children living and surviving, which throughout human history was not a safe assumption. If the population can survive, then they don't need to have as many children. And you start, so that's kind of step one. Step two has been there's less there's one like less good explanation. And I'd be really curious to get your point of it, but we're now at a point where people are choosing not to have children. They're having fewer children, and so that's where we are seeing, even beyond the infant mortality effect, they're still choosing to have fewer children. So now I think the U.S. is down below 1.7, 1.6 or so. So uh, I think I have a good chart here. I think that helps. The reason I bring up the U.S. specifically, even though we're trying to track global, is that it's easier for you and I to relate to it. Basically,
Mhm.
um, it's easier to understand the story behind it. So let's take a look at you. Oop, there we go. There we go. So again, this is going to be U.S. population. I actually wanted this one for U.S. fertility rate. So
Mhm.
we can see it has been coming down. It is around 2 for a long time. We actually got to the 2008 financial crisis, and that's where we
Mhm.
dropped. Again, 2 years later, it dropped down below 2%. Um,
What,
and
two births per
2 births per female,
per
births per
female. Yeah.
woman in the United States.
Yeah.
And
So two
so
is the magic number in terms of replacement rate, meaning if each female has 2 kids, then the population can be stable because in theory, if that female replaces herself and one
and her
male
partner.
who's not
Yeah,
reproducing on his own, then you have a
exactly.
stable population,
Exactly.
right?
Uh, so we
So
did see that
what
for a long time, but
Aaron is showing, the U.S. is crossed below 2. What year did the U.S. cross below 2?
So I don't know why, and I'd be curious. In the 70s, it did. Uh,
Okay.
but then again, we saw in 2007 it was 2.1.
Okay.
2008 was 2.1. 2009 to 2010
Yeah.
1.9. My
Okay.
guess here is this is related to the financial crisis, that it started becoming just financially more difficult for people to pay for children, to raise children. And
Yeah.
since 2010, we've seen it actually drop down to about 1.6 currently.
Yeah. So
So
that's a stark contrast to the 60s where it was around 3.5.
yes, and so I'm guessing the 60s to the 70s was more related to infant mortality. Like we started seeing vaccines become popularized. We started having better healthcare, and uh, we've just kind of moved past. I'm going to guess kind of fewer at home and or rural births, more hospitalized births from professionals.
Hmm.
Uh, so that's why we got down below 2% in the 70s. I don't
Yeah.
know, but we did see it actually
2.0.
come back up to 2.1 in 1990, and it stayed very level for 30 years almost.
Right.
Probably 20 years. 20 years. Yeah.
So I think this is something we've discussed in some other earlier conversations on, just the challenge of the price pressure we've been seeing in terms of cost of living over the last generation.
Hmm.
I think that does certainly tie into the decision to have more kids. And some of the things that we've highlighted is, for example, a generation ago, your housing was about 15 to 20% of your household budget. And now it's like double that.
Hmm.
Previously, your student loans were paid off in the first few years after you graduate. Now they're like an additional mortgage payment on top
Yeah.
of your already doubled mortgage payment. And then you have rising costs of healthcare, and then you have just general cost of living constraints. So, in the median household case, some of the high level takeaways that we've noticed is now that the median household income, when you normalize for inflation, hasn't increased so much over the last generation. So, the
Hmm.
income part, the money coming into a family, is about the same. But here's what has changed: the expenses part have ballooned. At the same time, to support that median household income, you have two people working, right? Instead
Yeah.
of one person and then a stay-at-home person. So now you have two people working, and each year is getting harder and harder just to make ends meet. Well, then the priority on having kids is going down, I think, for these reasons. So families are starting later, right? People are getting married
Hmm.
later. People are deciding to start having children later in life or fewer children. The whole notion that once you graduate from university, you might just end up back at home,
Yeah.
because it's just you can't live on your own. So I think all of these pressures are leading to the declining birth rate below 2 that we've seen in the last 5 to 10 years.
I I agree, and it also starts to get a little more anecdotal. It's more like it makes a lot of sense. A lot of these charts line up. Uh, housing, a lot of things get like housing more expensive, along with education and healthcare. There is probably less discretionary income uh, per household. We are seeing again wage growth has not kept up with, it's barely kept up with cost of living, um, and so collectively feels like the population is deciding to have fewer children. And I I don't I agree with that. And so now it's the I think it's a good point to start to maybe look at like Japan now. The reason we use Japan is this is a really good example of a population where we are 20 or 30 years behind it. So like this is what the U.S. population growth could look like over the next generation, is what Japan has looked like over the last generation. Would you say that's fair?
I think we can draw some parallels or use some insight from what happened, what has been happening in Japan. I think we want to be cognizant of what could potentially happen if populations stagnate or decline.
So here I have the good chart of, again, this is going to be Japan's population from 1950 to now, and we can see it actually did peak in about 2008 or so.
Yeah.
Maybe 2009 at about 127 million, and it is now down to 122 million. So again,
Right.
the 122 versus 127 doesn't look that big, and this chart going down doesn't look like it's going down that much. But we can start to see when we look at the percent change, this is the first time we've seen red numbers on percent change. And so we actually do see the population of Japan has been going down for about a decade.
Yeah.
And
So
so
no more
it's
growth for sure.
it's the idea, if we look at that um, from like 1980 to 2010, that 30-year period, we see that reduction in population growth from 0.79 to down to literally zero. And if we look at the same thing on the US, that's kind of what we're going towards, is in 2000 we were at 1%, but we've been below 1% growth
Yeah.
since then. These spikes we did check is actually related to census data, where outside of the census we're doing a lot of estimating, but once we get census data we actually have to start fixing that. But we're looking at 0.5% population growth in 2025, which would line up with something like Japan in 1986.
Yeah.
So that,
And Japan basically continued that falling trend that we're seeing in the
yeah,
US. So then the question that we want to put forward is, what if that trend continues in the US like it precisely did for
yeah.
Japan
So
over the
again, this
last
is like
40 years?
this is again like we got like a 20. We can see kind of this is a possibility 20 years out kind of
Yeah.
thing. So
And
this is one of the concerns we have of the U.S. population could get down to like could peak in 20
right.
years. Could actually
And
get to a point where the population decreases.
I think to highlight the impact of that, something Aaron, you and I looked at was, okay, now what does that mean over a generation? So we mentioned, for example, that GDP or for the entire planet is a function of productivity per person times population. Now in Japan, what happens now that we have a scenario to look at where the population has been decreasing? How has that economy been able to keep up with that? So let me share my screen now. I switch gears, Aaron. Add that to stage. Okay, so what we're looking at here is a chart from the year 2000 to the year 2023, and it's looking at the productivity per worker in Japan versus South Korea. We'll focus on Japan for the moment. And what the chart is basically saying is, over the last 25 years, basically a generation, the productivity per worker has been flat essentially for that country, meaning the productivity per person, if it's flat and the population is going down, that means your overall GDP is not increasing. It's basically flat or negative. And now let's tie that back to the stock market for Japan. Let's look at the Nikkei.
The
So
Nikkei is the index of Japan specifically. Similar to the S&P 500 is a U.S. large cap index. Nikkei is a Japan publicly traded company index.
right. So the chart I'm showing is basically from 1986, and that Aaron, that's kind of where your other chart started
That
as well.
that 0.5%, yeah, that's kind of where we are. Could be where we are right now in terms of population growth.
Right, to December 2025. So basically, what happened in Japan is they had a asset bubble, similar to like how we had an asset bubble during the Great Financial Crisis in 2008. They had it a couple decades earlier. And what happened during the asset bubble in the late 80s is Japan was, on fire. A lot of people were very bullish on the country, all the citizens were, that is, and they started investing tons of money in their local economy by buying up real estate, and asset prices caused the stock market to increase, and it caused asset prices to also increase, including real estate. And a lot of this was funded by borrowing. So that debt to GDP ratio, or that stock to bond ratio, was very it was very off-sided. For example, you had a little bit of stock controlling a lot of debt. When you think about it as a country, it's like the US borrowing more than its GDP. And I believe at the time, Japan's debt to GDP ratio was like over 200%.
Okay.
So basically, they had borrowed more than twice their economy in debt. So what happened is, from 1990, the Nikkei peaked at around 40,000, and it crashed. The entire economy crashed, and they went into a deep recession. And then they had this tailwind of lower population growth over the next 20, 30 years. So the Nikkei did not recover until 2024.
So for those listening, we have started in 1986. We had a huge spike from under 20K to over 40K Nikkei index in 1990.
Yeah.
And from 1990, it drops down to probably 1992 or 1993, drops down below 20,000, and stays between, say, 15 and 25,000 for 30 years. Yeah. 30 years.
So it's like saying the US stock market drops by 60% and doesn't recover for 35 years.
I think we want to caution people, we're not this pessimistic. We're not trying to say that the stock market is going to do poorly, and we still invest our money in stocks. We invest in US stocks, we invest in international stocks. We still invest in stocks, and we're not trying to make a prediction.
Was that pause too long?
It's when you look at Japan, I don't say it's a worst case scenario. There's probably worst case scenarios possible, but this is a realistic downside possibility.
I think it's a cautionary tale.
Yeah, there you go.
Here's what happens if a country, borrows a lot, is too bullish, gets kind of over its head in debt, and then the population starts to decrease.
Yeah.
And it's like a perfect storm of, well, that's not great, right? But look at the US, though.
I remember, when Mitch Romney was running for president, and he introduced a phrase like "grow our way out," and it was one of those that actually makes sense. That's possible. That could work, and no one believed it. No one no, we need to you can't spend more than you make. No, it's it's okay for that borrowing to increase if our GDP is increasing more. So we can grow our way out. That actually does work. But Japan is the opposite of that. Of if you even if you kept borrowing steady, if you actually have that negative growth, you can actually, let's the opposite of grow your way out. You can decrease your way into a horrible situation.
Well, so I think this does pertain to our real estate conversation, because Japan borrowed a lot, but they put a lot in real estate, right? With a falling population. Now, the thesis I put forward in our last conversation is, okay, debt, investments are good, but not all assets are good, but not all assets are created equal. And my personal opinion is you want to put money into assets that are designed to grow because of increases in productivity instead of assets that are designed to store and hold value like gold or Bitcoin and things like that. And real estate was that question mark for me because in many situations, real estate can be thought of more as holding value, but going up because of scarcity. Same reason why
Mhm.
gold might go up. Whereas stocks are going to be going up because the companies are getting more productivity. So if a country can only do a certain amount of borrowing and they put all that borrowing towards real estate and not enough towards stocks, well, I feel like that can be a concern,
I
especially with a decreasing population, right? So another reason
so
why I was just going to add one more reason why Japan um, faced headwinds is because there's one other dynamic in population beyond how long people live and
that's
how
exactly what I was going to.
many
Yeah, go
right
ahead.
how many births there are, and that's immigration, right? The
Mhm.
flow of people between countries. And Japan's stance has been more isolationist.
Mhm.
It's a country that hasn't been as forthcoming to immigration as the US once was, right, over that same generation.
I think that's the thing that we don't know is going to happen. This is where we could see that again, I do think that the population growth by birth in the United States will remain under 2 for a long time. That is my guess.
Mm-hmm.
I think there's a lot of trends going in that direction, both in terms of what we've seen with other developed countries and some of that purchasing power per person idea, and just things getting more expensive. Like
Mm-hmm.
anecdotally and by data, I am willing to believe that one.
Mm-hmm.
The immigration side, we is like the big wild card. It's the U.S. has a strong history of strong immigration
Mm-hmm.
and a recent trend that is very anti-immigration.
Mm-hmm.
And I don't know if that's going to flip flop every 4 years. I don't know if that's going to kind of for the population to understand that if you want our stock market to grow and our
Mm-hmm.
population isn't growing by births, we need immigration to help support the stock market. I, maybe we'll get there collectively, but I don't know.
Yeah.
But yes, if we because again, I think we saw that on we put a couple, the fertility rate of the U.S. The births per woman is 1.6,
Yeah.
but we
And
still have a growing population
mm-hmm.
because we have positive immigration. And if those trends continue, if we could see uh, population growth by immigration to be greater than the loss in growth by fertility, then the U.S. can continue to be really strong and continue to be the largest economy in the world.
Mm-hmm.
Um, so that's why I say that cautionary tale I think is very important to understand. Of if the population of the U.S. actually does start shrinking, then yes, I think a lot of these are concerns.
Yeah.
Um, if we continue to be receiving more immigrants than most of the world, the way we have in past generations, then it could be okay. Could be just fine. Could continue to be the largest economy in the country or in the world.
Mm-hmm.
And so that's why I'm going to invest in U.S. stocks. I'm also going to invest in international stocks.
Right. Yeah. So I think that is an important point to make because I'm not as concerned about a Japan situation, but it's more because I believe in investing globally, right?
Mm.
I think like 2025 is a good example where the US stock market in aggregate was up like 18%, something like
Mhm.
that. Whereas developed European economies were that stock market was up like 35%
Yeah.
in 2025. And emerging markets were up like 25%. So overall, the planet was up like 22%, but the US was not the leader last year.
Yeah.
And, I'm not saying that there's been a fundamental shift, but what I am saying is that we don't know which economy is going to be or which stock market is going to do better in any given year. But if we hedge our bets across the planet, basically what we're betting on is Earth does better, right?
Yeah.
Any individual country can underperform for some period or for a generation, like Japan. But if we hedge our bets across the entire planet, then what we're basically saying is if Earth does better over the next 40 years, we're golden.
Yeah.
If it doesn't, then probably the last thing you need to worry about is your stock market. Something horrible has gone wrong, that the planet has not done better over an entire generation.
I think we're still far enough away from that I can't make guesses.
You mean for the US or for the
No,
planet?
for the planet. I think that it's too hard to guess what jobs exist 30 years from now and what population dynamics look like, where people are choosing to live. Does the global population get closer to a 2 replacement rate, the 2 fertility rate, as more and more countries kind of moved into that from developing to developed economies? I don't know.
Well, it's interesting. I remember I've two things that kind of make interesting anecdotes here. I remember when I was a kid in like grade school, like first, second grade, that the big concern that they were telling us is we're going to run out of trees. I don't know if you've had this too, Aaron, when you were very small.
I remember the food, I think.
Yeah, I was about to get to that, but the big thing when I was a kid is we got to all the trees are getting cut down, right? They're going to go away and stuff like that. And I was shocked to find out that in this country there's actually more trees now than there ever been. And essentially the solution was, yeah, you can actually just plant more trees, right? Like there's ways to fix this problem. And similarly, like with the ozone, right? There was
Mhm.
that was also a big concern,
I
and
remember that one a lot, yeah.
we've made a lot of progress on that. And then in the 90s, I remember the big concern is there's going to be way too many people.
Yeah.
There's no way the birth rates are going to slow down, and we're going to zoom past. We were adding like a billion people every like decade or something.
Yeah.
And we're just going to keep going. And once we hit like 15, 20 billion people, there's just not going to be enough resources for everyone.
Yeah.
And I think that thesis it's just not factually correct anymore.
Yeah.
I think we are seeing global birth rates stabilize, and we will probably see on a global basis population leveling out over the next couple of generations. So I think the too many people problem is not a problem that many economists worry about. In fact, I think they're probably more concerned about falling populations than growing populations at this point.
I agree on a country by country basis, but I'm trying to like make a guess on the global population.
I think there is some data to suggest that global population, well, when in doubt, just ask the GPT.
I do not. I think that we go back to, like, I think the first one we looked at was the linear growth on population, which implied and showed out to be a shrinking percentage growth.
Yeah. So based on current estimates, global population is estimated to peak in the 1980s at around 10 billion, 10.3 or 4 billion.
You said 1980s.
Sorry.
You mean
2080s.
Okay.
Okay. I will be 100 if I live that long. So yeah, in about 40 or 50, sorry, gotta do some math. In about 60 years and change, global population will probably hit its peak based upon current estimates and trends.
I think
And
it's like based upon current estimates and trends.
yeah,
Like
yeah. So then the question is, what would change that in either
yeah,
direction, right? I think as far as birth rates, I think if people want to have more babies, then we got to solve the whole cost of living concern in terms
yeah,
of why people don't want to reproduce. And I think as far as the productivity issue, I think there is another wild card to think about. It's something that um, I think is even more of a possibility now than it was 10 years ago. So Aaron, offline when we started this conversation, we noted that Aaron, you've had three kids, sorry. And
yes, yes.
I have one child. I have not done as well in my replacement rate for my family as you have done, but on average, we're okay. But the other consolation I said is, well, my second child's productivity decrease will be made up by the robot that will do the work in our family, to take up that space. So uh, essentially, what I'm saying is, in theory, if we have enough productivity from increases in advancement, it could be fine. Global GDP could continue to grow, even if population stagnates or decreases. So that's certainly a possibility.
Okay. It's and sorry, I pulled up the European Union. Their fertility rate has been under 2 since like the late 70s.
Yeah. Well, what is the global fertility rate? Or I can just ask.
I think I had that.
We have too many charts open now for me to find where it is. So I'm just gonna. Okay.
World fertility rate is again like data gets weird. So like there's a jump from 2023 to 24, like but 2.3, 2.4 or so.
Right. I have like 2.2 here.
Yeah.
Um, so yeah, it's trending in that direction of crossing 2 in the next 5 to 10 years, if not sooner. If demographic
Uh,
changes don't change.
five. I don't. I don't know if it's that fast.
So I see 2.1 as well. That's why I thought it might be sooner rather than
Oh,
later.
okay. I think so North America. So like uh they have a region ranking. It's interesting.
Yeah.
Africa is over 4 still. Sub-Saharan Africa is 4.2. The world is 2.4. Central America 2, but North America is 1.7. So it's one like um
Yeah. So
like does Africa get below 3 anytime soon?
right. Yeah.
Uh I think that
So
might be the bigger driver than the rest of the world decreasing.
right. So actually, it's interesting because we are at an inflection point where, again, demographic trends are pushing in that direction where we'll likely cross below 2 if the status quo doesn't change. Meaning, like we said, the cost of living in developed countries doesn't alleviate, and
Yeah.
Africa is headed in that direction. So certainly population will not be increasing by like a billion per year, I mean per decade or so, unless these trends change. So that
Yeah.
headwind to the growth in our economy will not likely be count onable. The other thing that we haven't mentioned that we certainly need to is that just because the population has stabilized doesn't mean that your workforce has stabilized, meaning people are going to start aging out of the workforce that don't return. So even if people start living longer, a similar concern in the Japan like situation is that you have more elderly, right, in diapers than you have young kids, and you have more people in nursing homes, and you have an entire elderly population who might be in a semi-retired state being supported by a smaller minority that's working, in air quotes.
So one thing I can vision, it's not again, not any guess, but like the opposite of caution, like a optimistic possibility from a data perspective is I can see the like working age population getting slightly older, like people staying in the workforce later as they are healthy and or feel that they want to be productive. Um, on the very pessimistic side, people might be in the workforce longer, even if they don't want to be. But an increase in the working age population could also change that.
Yeah. Well, so we've talked about this in terms of deflationary pressure has been there in many parts of the economy. Things have been getting cheaper, right? Especially those things that are tied to commoditizable products with lower rent friction, right? Basically, everything besides healthcare, education, and housing has done a good job in becoming more affordable. And I think if we are able to, over the next 40, 50 years, figure out ways to tackle these last three, I think that puts deflationary pressure in terms of cost of living on the rest of the household budget, to the point where things could potentially get cheaper and cheaper, even though populations and workforces are declining, if advancements in productivity are allowed to do their thing.
Yes. Like, as I listen to you, I realize just like you listening to me on the previous statements, like, yeah, we're just making up guesses now. Like, here's like, okay, one path, like best case scenario, worst case scenario, and it's like the one here like goes down then up, and the other one goes up then down, and then like you have up up down down, and you have like down up. It's like there's so many different ways to describe what we don't like, the potential paths of the future that we don't know.
Yeah, I'm optimistic. Maybe that's a better way to say it. I think we'll figure it out as a planet.
I think globally, I'm much more optimistic than domestically.
Yeah, I'd say that too. I'd say as a human species, we're quite resilient at figuring things out, and
Yes.
I think we have the capacity to do so. So back to our earlier thesis. Well, if you just invest your assets globally, then maybe you'll be okay, regardless of which particular country wins or loses.
I agree with that. Maybe I should expand my buy real estate in the nice places to live out to like the global population. Like, what are the nice places to live around the world? Go find those like just the latitude of San Diego, and just like go like circle around the globe on that latitude.
You're forgetting about the domes, Aaron. Like, that was the whole. There's gonna be domes everywhere.
Oh, that's right. That's right. Everything's gonna be the same climate as San Diego.
Yeah, you can have your own climate controlled dome wherever you
Okay.
live, and the robots will make it for you for free.
Okay. I hope those watching enjoyed the charts. I hope those listening could at least follow along. Again, it's one like there aren't really any conclusions to come out of this, but understanding how stocks grow from how economies grow, from how populations grow, and productivity is it's a good refresher of like, yes, these things matter, but these are long-term trends that are outside your control anyways. So.
Fair enough. Yeah, and again, I come out just being optimistic on all this. So hopefully we haven't scared anybody with that 5-second pause.
Okay.
In the middle of the episode.
was good talk today, Trishul. We'll try to get less data-driven next time.
Good stuff, Aaron. I still enjoyed the conversation, and I thank everybody for listening and watching. And of course, if you enjoyed it, do click a like or share. Every little one helps. Thanks. Bye.
Bye. We appreciate you joining us today for this episode of the Mind Money Spectrum podcast. Be sure to visit mindmoneyspectrum.com to access the entire library of episodes. Remember, it's not black and white, but the wide spectrum of gray area where you get to pursue the freedoms you want in life. Opinions voiced in this material are for general information only and are not intended to provide specific advice or recommendations for any individual. All performance referenced is historical as no guarantee of future results. All indices are unmanaged and may not be invested in directly. Have a nice day.